In this module, we're going to talk about cash to close. Cash to close is money that you need on top of the down payment money. One of the things I like to do to explain it, you got three buckets of cash that's needed to buy a home. First bucket is the down payment money. That's one everybody knows about. That's not the only money that you need. And people caught by surprise going, oh, I thought I have a 3% down payment program. I'm buying a $200,000 house. All I need is $6,000. That's not true. There's two more buckets. So we know about the down payment bucket. On the other bucket for the costs, that's your cost bucket. These are lender fees, title fees, escrow fees. When you get your house appraised, it's going to be all these fees, these costs are in that second bucket. And those costs are going to run you anywhere from $5,000 to $8,000 depending on how much you're spending on a house. The next bucket that you're going to have is going to be your prepaids. These are your first year homeowner's insurance, your property tax payments, because you're going to have your impound accounts that pay your property tax for you, that pays your homeowner's insurance for you. That's included in your payment. When you do that up front, they expect you to do prepaids. You're going to prepay the first year of your property tax, right? That's a given. You're also going to get hit with maybe another 2 or 3 months of property tax, so there's some reserves in there. I'm sorry, of homeowner's insurance, so there's some reserves in there. Similar things happen with your property tax. A certain amount of months of property tax are going to be collected up front as prepaids, and that varies depending on what time of year that you close. So that's going to be your third bucket. So between the three buckets, you have your down payment. That's the cash that you need. The next bucket is going to be your fees and your costs. Again, $5,000 to $8,000, and your prepaids. When you're looking at your prepaids and your fee buckets, you can figure roughly 2–2.5% of the purchase price of the house is about what these are going to make up. That's why I say when I was discussing in the down payment assistance module that if you get a 5% down assistance, you get 3% because you did a conventional loan with 3% down. 3% of that 5% used towards that. You still have 2% to help pay your closing costs. If your closing costs are coming in closer to 2% because of these buckets, that's where you can get in and have zero out of your pocket. So there you go. I'd like to cover those for you. More than just the down payments needed. You also have closing costs. Closing costs are going to consist of your fees and your prepaids. 3 buckets of cash and you're in there. All right, that's it. We'll see you in the next module.